If you are a complete beginner and you want to start trading today, this video is for you. In this video, we will create a trading account and link it up with Metatrader. We will also learn a simple strategy you can use to analyze and catch trades in the markets. And we will also learn how to use signals to trade step by step. My name is FX Scooby. Let's get into it. Before you can start any trading, you need a trading account. And for you to get this trading account, you need to register with a broker. Brokers are more or less middlemen between we, the traders, and the markets. We deposit with them, and then they facilitate our trades in the markets. There are a lot of brokers out there, but the one we would use today and the one I recommend for you guys is ESX Markets. I have their page pulled up on my screen here, and I'm going to drop a link in the description for you to use and then register an account. I am going to show you guys how to register an account. So first things first, you go click on sign up. Now here I am going to use one of my emails to register, country of residence, Nigeria, and then password. Let me just put a random password. And then you click I'm not a US resident and then agree and then register. So now a confirmation email will be sent to your email of registration. So you need to go to that email and then click on it to confirm. I'm doing the confirmation on my phone actually. I'm with my phone here. So here you would see activate my account. So just click on it and then follow the instructions. Now email has been successfully confirmed. So sign in. So here you don't have any real account yet. For you to have an account to be able to trade, you need to create a real account. So I'll click on real account and then use the standard account. So execution system, market execution, and then leverage. Use a higher leverage so you can actually be able to place trades with higher volumes in the market. So use 1 to 500 and then create accounts. Now account created, now I can deposit. So if I want to deposit, I just click on deposits and then it brings me here. So I have numerous channels I can use to deposit. If you want, you can use crypto, USDT, BTC, and then for Nigerians, you can actually use instant bank transfer. I'm going to use instant bank transfer to actually deposit and then confirm and then put the amount $10 and then currency, Nigerian naira, and then continue. Okay, I have to put the amount in naira, 14,000, that's $10, and then continue and then confirm. So click on continue and then pay with bank transfer. I understand, and then continue. So what I need to do is basically transfer from my bank to this account here, and then it will reflect on the trading account. Now I've sent to it, so it has deposited it in my wallet. So from my wallet, I would actually need to transfer it to my trading account. So click on the wallets, click on internet transfer, and then recipient account, my account, deposit amount 10.14, and then send, confirm. And now if I go back to accounts, you'll see that that's my balance basically. Standard account, $10 here. From here, what we need to do is link this trading account to Metatrader. Metatrader is basically where we do everything trading. We execute our trades there, we take our profits there. All the instructions we are going to give our broker about trading will happen in the Metatrader. What we just use this broker to do is just deposit and then withdraw. So now to link this trading account to our Metatrader, we need to get the trading account information that was sent to our email. So let's go and check it out. So here's the trading account. What I need to do now is copy these details and then paste in my Metatrader. For this, I'm actually going to share my phone screen and then show you guys how to do it. Now, before we get into it, if you don't have Metatrader on your phone, just go to your app store and then download Metatrader 5. So I have my phone screen here. What we need to do is go to Metatrader 5. Here it will ask you to open a demo account, but what we want to do is log in our real trading account. So cancel. As a cancel, they brought me to this place for brokers here. But if it doesn't bring you here, what you can do is just go back, click on trading accounts, and then click on the plus to add an account. Now search the company or server name. So this is ESX Markets. So see the server here is ESX Markets Global. So I can just copy this, or you can just type it. I'll just type it, ESX Markets Global Limited. So this is it, and then login. So copy the login and then paste where login is. Copy it and paste, enter login, paste. Then password. Make sure you copy the correct password. Now, with this, you just click on sign in and then it will log in your account. So if you want, you can save the password. So now, if you look at this, I have my account balance and then all the different currency pairs I can trade. So now we are set to trade. But then before we place any trades, we need to know how to make analysis in the markets. We need to know how to analyze our charts. And for that, I am going to be teaching you a simple high win rate strategy that you can use to analyze and get trades in the markets. The strategy we are going to learn is a very simple strategy, and this strategy is called support and resistance. We are going to learn the basic way to use support and resistance to get buy and sell opportunities in the markets. So, support and resistance. Before we get into how we can use support and resistance to buy or sell, first of all, we need to know what support and resistance is. Now, support and resistance is just another way of saying a low and then a high. Now, support is more or less any low we can identify on our charts, and then resistance is any high we can identify on our charts. Now, if I have a chart and I see price movement like this, any high I see is a resistance. So this is a resistance. This also is a resistance. If price creates a high here also, this would be a resistance. Now, any low I can identify is a support. If price actually stops here and then push up, we have what? A support. Now, likewise, if I have movements like this, where price is going to the downside, any high I see is a resistance. I'm going to call them in red. If price push up and drops, we have a resistance. Now, any low in purple is what? A support. Here also we have a support. Here also we have a support. That's basically support and resistance. Support is any low you can identify on your charts, and then resistance is any high you can identify on your charts. Let's look at a chart example. So if you look at this chart, you see that one thing that is rampant is basically series of highs and lows. So if you look at this place here, we have a high. Now I am taking the wicks of the candlestick, that's a resistance. So I'm going to type resistance there. We have a low here, this low here. So there's a low there. I'm actually doing it to cross this candlestick, so I'm going to type a support there, support. We have this high up here also, that's a resistance. We have this low here, that's another support. So type support there, support. We have a resistance up here, that's that high there. So we have a resistance. We have another low here. Now that's a support. So we have, let me see, we got another high up here. That's another resistance. Now, if you observe, I'm basically picking wicks of candlesticks as the highs and then lows. The highest point, lowest point, highest point, lowest point. Any high you can identify resistance, any low you can identify support. So let's get back into it and then see how we can use this support and resistance to get trades in the markets. Having looked at what support and resistance is, let's look at how we can use support and resistance to get buy and sell opportunities in the markets. Now, the basic rule of using support and resistance to trade is buy from support, sell at resistance. Buy from support, sell at resistance. But here's something very important. For this thing to work, we don't just dive into the market and then start buying from every support or selling from every resistance. We have to factor in one very important thing: what direction price is going towards. So if we see price going to the upside, the key thing you should note here is that price will more or less be passing previous highs to the upside. So in that case now, we'll be looking to buy. Or if we see price going to the downside, the key thing to note here is that you see price was passing lows to the downside. The word here is break, but then I have to break it down so that you understand. So once you see price actually passing lows to the downside, then in this case we'll be looking to what? Sell. Now, where we're looking to buy, we'll be looking to buy from support. Where we're looking to sell, we'll be looking to sell at resistance. So let's dive in and then see how we can do them individually. So we start with buying from support. Whenever you have price going to the upside and then price creates a high, and then price starts dropping to the downside before it to push up again, you highlight your most recent support level, which is your most recent low, and then wait for price to come back and then tap inside. Now, once price taps inside, we are looking to buy. Now, as we are buying, we're anticipating that price will basically what push up to the downside. Now, whenever you buy in the markets, once price starts pushing up, you're making money. So if price gets to push up from here and we catch this buy, then we make money as price is what going up. That's basically how we use support to basically get buy opportunities in the markets. Now let's look at how we can use the resistance to what sell. Now if I have price pushing to the downside, let's say price creates this low and then it starts retracing back to the upside. Once it starts retracing to the upside, we highlight our most recent resistance level and then wait for price to come and then tap into that resistance. Once it taps, we'll be looking to sell in anticipation of that whole drop to the downside. So if we sell here and then price starts moving to the downside, we are going to be making money. Why? Because whenever you sell in the markets and then price goes down, you actually make money. So if price actually moves down from here, we're actually going to be making profits. That's how you use basic support and resistance to either what buy or sell in the markets. Now, let's jump on our charts and then take a look at some examples. So I have these charts here. If you look at this, you see that the current price is basically heading to the downside. We'll have price creating a low, this whole high that is lower than it, and then we'll have another low, and then price has started retracing to the upside. That started pushing to the upside. And like I said, once you see price pushing to the upside like this, you highlight your most recent resistance, which is a high. So in this case, since price is actually pushing to the downside, we're looking to sell. Do you understand? So we're looking at this movement to the upside to go, tap into this our most recent resistance, and then we sell. Now once we sell and then price starts pushing to the downside, we're basically making money. So now let's basically watch how it plays out. Now that price has basically tapped into that whole area. Once price taps inside, we're looking to sell. So entry here, and then we target down here, something like this. So now let's watch how it played out. Now, mind you, are selling, so before we make any money, price actually needs to continue going to the downside. Now, as you can see, price basically stopped at that resistance level and then sold to the downside. So if you actually sold at this resistance, you actually would make money as price is going to the downside. So let's take a look at another example. Now, we have price actually pushing up here. We have price creating this high, this low. Price pushed up, created this low. Now price pushed up again, and then now it's retracing to the downside. That is basically coming back down. Now if you observe, if I move this thing like this, you see that price is moving to the upside overall. So in this case, we're looking to buy. Do you understand? Now we're looking at where this current movement, this whole move to the downside, where it will potentially stop, so we can buy and then follow price to the upside. Now where can we look to buy? Our most recent support level. So we highlight our most recent support and then extend and wait for price to come back and tap inside so we can buy. So we'll be looking at doing something like this. Once price taps, we buy from here and then look to follow price to the upside, something like this. So let's watch how it played out. Price tapped into that level. Now immediately price tapped into that level. The moment it taps inside, we'll be looking to buy, something like this, and then we target up here, something like this. Now the moment price tapped inside, we started pushing up. So now this moment where price is up here, we'll already be making money. We've actually cut it like inside this level. So let's watch and see how it played out. Now you can see that price basically went up and then tapped that level we are highlighted, where we put our take profit at, before actually dropping to the downside. So that's basically how you use support to buy when price is going up. Now let's take two last examples. That's one for a sell and then one for a buy, and then we actually call it. And then we actually, I wanted to say, and then we actually call it an evening, but then no, not an evening. Yeah. So we have price pushing to the downside here. Price basically created this low, this high, this low, and then now it's pushing back up. But if I move this thing to this side, you see that it's actually moving to the downside overall. So in this case, we'll be looking to sell. So where do we sell? Our most recent resistance level. We highlight our most recent resistance and then wait for price to come back, tap inside, and then we sell. So let's watch and see how it played out. Now the moment price tapped into that level, this green candlestick tapped inside, so we'll be looking to sell in anticipation of price basically moving to the downside, something like this. Now let's watch how it played out. Now you can see that immediately price taps inside, we got that whole drop to the downside. And if we jumped on this sell, as price moved to the downside, we basically would make money. That's how you make money, using resistance when price is going down. Now let's take one last example for buys. So if we look at this situation here, you see that price was creating this high, this low, this high, this low, this high, and then now it's basically dropping to the downside. Now if I move this to this side, you see that overall price is pushing up. And like I said, when price is pushing up, we're looking to actually buy. Where do we buy in this case? Our most recent support level. We highlight this most recent support, and as you can see, price has tapped inside. So at this point, we'll be looking to buy. We'll be looking to buy and then follow price movement to the upside, something like this. Now let's watch how it played out. Now price basically stopped inside that support level and then what? Pushed to the upside. As you can see, this is actually a very simple strategy you can look to learn and then master and then use to catch trades in the markets. So I understand that some traders might not have the time to actually sit down and then analyze the charts for themselves. Or some might not have the confidence to basically use their own trade ideas to trade. So in this case, what you can do is follow signals. Most forex traders actually give out their signals. That's the trade ideas they see, like something like this, where we buy from here. They tell you, okay, buy at this point, exit at this point. So we're actually going to look at how you can follow signals and then trade in the markets. In this case, I'm going to use my signal group, my personal signal group. I'm actually going to drop the link in the description also. I'm going to use my personal signal group and then show you guys how you can like follow it. So here's a signal I dropped on my free signal community a while ago. Here we're looking to sell AUD USD. Now the instruction was sell AUD USD now, SL, which is stop loss at 0.71841, take profit at 0.71145. So what you do in this case is you impute this into Metatrader. So let me pull up my Metatrader. So in this case, what you do is you go to Metatrader and then look to see if you have AUD USD. We have AUD USD here. Our markets are closed. But then what you do here is you click on AUD USD, click on trade, and then you impute your lot size. I'm going to attach a chart to this video, but if you have an account less than $100, I would recommend you use a lot size lower than 0.03. So you can use 0.02, something like this. And then you copy this stop loss. So the stop loss 0.71841, you put it at your stop loss level, 0.71841. Your take profit, you impute it also 0.7171145, and then you buy by market. But you can see that markets are closed. But then that's basically how you follow a signal. If the markets were open, it will actually activate. Sometimes the person giving you the signal will give you a stop loss, but then not a take profit. But then they'll tell you when to close. So you just have to pay attention on the person's community or where you're getting the signal for instructions on when to exit. And that's basically how you get a trading account. You link it up with Metatrader so you can trade, and then you do analysis on your own or you follow signals. If you have any questions, you can look to ask them in the comments below, or I am going to attach a link that you can use to book a free one-on-one online session with me. So at this point, I'm going to wish you a very, very wonderful trading journey ahead. Catch you some other time.